Good morning, everybody. I'm about 2 days behind adding the audio to my videos. So what we're watching right now is September 17th. Right now I'm checking to see where price is in the range of that last leg. It's already touched below the 50% fib level and touched into that hourly fair value gap. That's on the hourly chart on the left is what I'm working on. Pretty much the same routine every day. Wake up, mark my points of interest on the hourly, and then minimize that and start working on the 1 minute. I think we're about to see my first trade, which is a short. And the idea here was that we displaced below that hourly level, the yellow line, and are probably going lower. The big wick on that previous candle on the 1 minute was a pretty good indicator that I was chasing the right direction. And if memory serves, I actually could have closed this for like 200, and I don't remember. Yeah, so I was getting greedy. Did you see that 350? I try to do base hits, even when I'm super confident. But I went ahead and closed it. Based on that new yellow line, thinner yellow line that I drew, which is displacement over to the left. think I end up adding a contract here, maybe. Or closing it for a loss, I don't remember. I think what I'm waiting for is whether or not that candle body is going to close above that yellow line. And it does. So yeah, so I add a contract with the intention of closing it if it gets back to break even. Because price action now seems to be going against my original entry. Yeah, right now, hand on the close button, just in case it runs way up. I think price just kind of goes sideways for a while, and oh, there we go. Yep, skipped forward. You can see I took another short and closed that down in the purple fair value gap. And then while also down in that fair value gap, it might be hard to see, but I went long and closed that long out near the top of that most recent high. This trade I'm in right here, this is a trade that I struggle with, where based on how the candle action was happening, I expected it to continue dumping, and some of that was bias, and me just thinking, oh yeah, it's gonna go down further, and that last 1 minute candle was really strong, so I'm just gonna get in now. It's not a very smart way to trade. It's an old habit, and I'm trying to break it. Trying to get better at realizing I'm doing it before I do it. But anyways, I get really lucky here, and I'm able to add one or two contracts and get out of it. And then post yeah, $10. Execution-wise, this day was not a great day. Right now I'm circling a little formation that I think ICT has a name for it. I don't remember what it is. But me and one of my trading buddies, Uber Bok Choy, we call it the whatever because we can never remember what its real name is. But I'm showing how price comes up to the line, touches it, pulls back, then goes through it, creates an order block on it, then comes back to retest it from above and continues on. That's one of those, that framework, if I happen to see it live, which I don't always see it live, but if I happen to see it, I will trade in whatever direction it sets up as. Which there, if I had seen it live, I would like to think I would have taken a long, but I could also see myself being hesitant because there's an hourly level right above it, and there's a good chance that price would reject there. So who's to say? I don't know, but just trying to be honest with myself and you guys. Another quick scalp based on the doji that landed right on that yellow line. Again, that yellow line is an hourly level I've marked out previously. Not really rocket science, just probabilities. Well, okay, so now we fast forwarded into the AM session. Missed this while making breakfast. Oh, yeah, that's a bummer. The wicks up into that hourly order block, right at the open. I mean, that's a super dangerous trade, anyways, no matter what. Because of how volatile price is at the open, but it could have been an opportunity to get in after seeing, is it 2 or 3 of those wicks? Yeah, that third wick, but trying to catch up with price action here. Pretty straightforward fair value gap from earlier in the session. I don't remember if it's all the way back in London, but that was the idea there. And it was the first visit to that fair value gap. which is what I really like. I know there's a line of thought that is the more times you see price revisit a fair value gap or an order block or any of those PD arrays, the more times it revisits it, the more times you can, or the more you can rely on it. I don't personally prescribe to that idea. I find that the very first visit to that area is the most consistent. Let's see what's going on here. So the bigger purple fair value gap that price is in right now is on the hourly, and it's pretty wide. I think I have one more long here. I think we get filled. Or maybe we don't get filled, and then I feel like I can see some action that makes me think I'm going to miss this move. Going back up, we'll see. I think I wait it out. I think I have the patience, and I wait for the limit fill and don't do a market buy. There it is. Quick little scalp. That purple fair value gap I just drew in there, I think it ends up being a bust, and I move it up to the next candle. Oh yeah, now price is up. Back at the first presented fair value gap, 935 value gap. Excuse me. It's an ICT thing. If you haven't heard about it, check it out. Go back test how price reacts around the first fair value gap created after 930. Super interesting. Reliable enough, I think. That I added it to my charts maybe about 6 months ago. Right now am I in the trade? Yeah. Gets a little dicey up here. And what I'm watching for, I don't know if I add a contract or not, but what I'm watching for is I do not want those candle bodies closing above the 930 fair value gap. That order block I just added is me setting my safety net. It's about the only thing left in my mind that's going to stop the price if I lose the 930 fair value gap. And as you'll see, candle bodies respect the fair value gap, so they stay inside of it. They don't mitigate it. Some of this language I'm using, by the way, if you're a new trader, a lot of this language I'm using is language I picked up from ICT and a lot of his YouTube mentorships. The concepts, the basic concepts, are pretty valuable. The amount of time you'd have to put into watching all of his videos to kind of glean, pick up those concepts organically. I mean, you're talking days. Like he's got videos that are 2 hours long, 3 hours long, and he covers like one concept. So if you have the time, definitely go check it out. If you don't have a lot of time, just check out I think there's an ICT dictionary out there. So there we go. I closed my short, and looks like I took it long based on that fair value gap, and then a second short. Or maybe I took it, I was talking while the video was going, but it was either two longs or me closing my short and then opening a long. It's hard to tell when it all happens in the same candle. Even though the little execution arrows are there. But yeah, big stop sign. That's when I say, I would have stopped trading. And that's it. That was the day. Hope you have a good week, and I'll talk to you tomorrow.